What is going on, everyone? Welcome back to another stock hours video. Today we have the Sunday stock watch list for you. Before we get started, do me a favor. It only takes a second. Leave a like, comment down below, and we'll get straight into it. First thing I'm looking at is how 2024 has been compared to a prior election years. So we'll take a look at that in a second here. These are years where we had election years in the S&P and how we performed. You could clearly see in yellow was 2008. Now that is definitely an outlier. I won't be comparing that to whatever we have in 2024. So the closest thing we could compare it to our market right now is a period of stagflation. So a period of where we had high unemployment and slow economic growth. So and high inflation all at the same time. We saw signs of unemployment increasing last week, and we obviously see signs of high inflation, and we see signs of slow economic growth. So we see signs of all of these starting to come into play. So what year do we have stagflation in? That was an election year. That would be 1976 here. So we will compare 2024 to 1976 if we see signs of stagflation on 2024. So I'm going to be paying attention to economic data, or what the Federal Reserve says about the data that we're getting. And if it shows signs of stagflation, then I would want to compare this election year to 1976. Now, I don't do that to try and guess what the stocks are going to do. I'm only doing that to understand where flow goes. So where does the money flow into the market when a series of stagflation in the year occurs? Next, we have sectors that are outperforming or underperforming the market. We could see here that these stocks are outperforming the S&P 500, and these ones are underperforming. So it's important to know what's outperforming or underperforming, because you would want to know where volume is flowing to. That will be your higher probability trades, higher probability setups in whatever industry you look to play in. Now, this is not saying bearish or bullish. This is saying outperforming, outperforming, underperforming. So low volume or lower volume here might be higher volume. All right, now this is my favorite part. So where is the gamma flow on the SPX? So you will notice that we have positive gamma at 51.25. So 51.25-ish is going to be an important level that the bulls need to hold above on the S&P. So we will see that play out if we move up here. And another level that I wanted to pay attention to was 50.50. So you will see the amount of flow that's coming into that, that expiration right on this. What is that? The 7th? Yeah, so that's the 7th of May. A lot of flow coming in at that 50.50. So whichever direction the market decides to pick up to, I would want to pay attention to these key levels. So 5,200, 5,000. 4,900 is a little far, but 4,900, 5,150, 50.50, 50.30, and 51.25. So all of these are going to be important key levels that I will plot out, and I want to see where flow comes in. So are we moving into positive gamma territory? Are we moving into the negative gamma territory? And so on and so forth. All right, now for the earnings. This is a banger week. I mean, obviously, you could see the amount of earnings that are coming out this year. There are some there's some funny business going on. Like, I will pay attention to how Uber, a firm, plays out. You would want to pay attention to the majority of these, because with sectors that are entertainment sectors like Netflix, for example, these types of sectors underperform in a year where people want to save money in. So if people are saving money and they're not paying enough on the entertainment aspect, like making sure they don't pay extra for Starbucks, Netflix, these kind of things. You want to see that play out into their earnings, and it gives you a sight as to how consumer sentiment is. Um, but in terms of actually trading, I won't be trading any of these except after the fact of when earnings comes out. Honestly, there isn't anything that sticks out to me, so I will just watch the behavior of probably Airbnb. ARM is going to be important, right? This has been a big mover. Rivian and Nikola, nobody pays attention to them anymore, so that's out of the way. Palantir is a big one, guys, and I'll show you why. So the expected move on some of these earnings is absurd. I mean, look at this picture here. You will notice that Lucid is expecting a 15 to 20% move, as well as PLTR, a 15% expected move on the week of that May. This is going to be insane. I mean, what I want to point out on this chart is we're seeing small caps moving larger amounts. So we're seeing that there's flow or value coming into into these small tech stocks. Example, Disney expecting a 10% move, ARM expecting a 10% move. Shopify is going to be a nice one to watch. So the majority of them are expecting really big moves, and I'm looking to play them after the fact. Moving into the charts. So the SPX or S&P, we are in a channel since August of 2022, I believe. And we traded up, right? Obviously, this is where the rally started back in October. We traded upwards, we held above, rejected, held above, rejected, held above, rejected. So now we're seeing that hold above at about that 20% retracement, right? Typically, when you see a 20% retracement hold above that way, you tend to see aggressive continuation into that all-time high. If we do not see that and it pulls back, right, we're gonna see signs of bounce and failure, that type of structure. So moving forward, what I want to pay attention to is if the 20 fib retracement does not hold, we will typically see about 30 to 50% retracement. Now, I do believe this lines up with the weekly charts to 50 SMA, right? I could actually, yeah, that it probably lines up with that 50 SMA around that 40, 90, 40, 50 area. It's going to be the strongest support that we have right now about that area into that 50 fib, 30 fib area. So if we do start coming back down from a rejection here, I will expect the market to lead into that 4,900 and 4,800. That's SPX, that's the S&P. And a zoomed in chart is where I will show you what zones I'm paying attention to in terms of intraday structures. I will look at a rejection off of this zone. So you'll see this was a heavily congested area prior. We broke through with no hesitation here, and then we started seeing some sides of rejections. So if we can't get a hold above that 5150, which is an SPX gamma level that I pointed out 2 minutes ago, then I will look to play rejections into this gap fill here. So you'll see that we left a gap at that area. I'll try to play a move into that gap fill. That's my SPX setup. Let's move into NVDA. So NVIDIA has a flat top right around that 910 level or 909 area. I will just be using 910 as a safer play. And what we want to pay attention to is how this trend here plays a role into where that setup plays out. So if the setup happens on Monday tomorrow, then we only have about that much room, right? So the longer this setup takes, the much more room it has. So I'll be paying attention to 9.10 with a target of 9.15 or about 9.14. So it's about a $4 move there. I would want to keep a $2 stop loss for the risk reward to make sense. Now, if it's possible to have a $2 stop loss, then I'll be taking that trade. Next is Meta. Meta has two gap fills. So we have a gap fill to the upside, which I'm not a huge fan of, and that gap fill starts at 455, and we have a downside setup at 440. So these are the two levels I'll be paying attention to: 440, 455. At that 455 level, I would want a hold above. So typically when you're moving into a gap fill, you would want to see price acceptance into first before you look to play that gap fill continuation. So you honestly don't want to be a part of that initial gap fill entry. I'll be staying away from that. So I'm looking at a hold above 455 for calls play on Meta, and I'm looking for the breakdown of 440 for a puts play on Meta. Next, we got Tesla. Tesla has a massive daily chart channel, which I'll bring into play in a second here. But before I zoom out of Tesla, I do want to pay attention to the gap fill that it had over that earnings run. So, play for Tesla is a hold or price acceptance at 175 to potentially play puts targeting that 170 range. So, from that area or that location, I would want to see price acceptance below 175 to possibly play puts targeting that 170. Now, zooming out of Tesla, we see the overall channel that is playing out here. This is the weekly chart. So this is the span of about that's Tesla's absolute all-time highs right there. So it's been multiple years, right? About 3 or 4 years. So we've been channeling that entire time. And what I want to pay attention to is how Tesla behaves at this channel. So it's been trying to hold for a significant amount of time. If it's capable of holding, I do expect this to start breaking outwards and away from this channel. If Elon doesn't obviously like mess with the sentiment of Tesla, right? People pay attention to what he says, right? If he's paying too much attention to other factors besides Tesla, people tend to sell out of Tesla. This is one of the most shorted stocks in the market. Currently, right now, it was SMCI and Coin. I did say that last 2 weeks ago in the Sunday stock watch list, and they aggressively sold off. So Tesla is next. This could get a short squeeze because they have tried multiple times and they failed, right? It did try to break once, failed, got right back above, tried to break again with earnings and then failed, got back above. So this could honestly get a short squeeze, guys. Pay attention to how it plays out above 205. I will pay attention to that 205 this week or the next coming week, and this could potentially lead us into that 300 range. Next, we have Amazon. Oh, sorry, AMD. AMD gap fill. I would want a price acceptance above 151 to potentially play calls into that 155. And the downside is far, so I honestly won't be paying attention to that. Next, we have Amazon. Amazon looks nice. I would pay attention to that 188. Now, why 188? Because if I zoom out, you'll see the larger picture. This is Amazon's all-time high. So we've tested twice prior, and I would want to pay attention to how we rejected here and came right back. Right, what I do want to point out here is we have been trading in a channel, right? And when we do trade in a channel, we would be careful playing calls at the absolute high of that channel. So trades on Amazon are going to be strictly scalps, simply because we are in a channel and we're at the high of that channel. But that level has been rejected 3 times so far. We rejected it the 3rd time here about a couple weeks ago, and then aggressively came right back. So this is a typical inverse H setup. These have aggressive continuation plays, and this is the same chart zoomed in. I'm paying attention to that 188 into that 189 and potentially squeezing higher. And that wraps it up for Sunday stock watches of the first week of May. If you haven't yet, do us a favor, leave a like, comment down below, and I'll see you guys in the next stock watches. Peace.